Okay, welcome everyone. Let's get right into the stock market charts. This channel is all about trade ideas using technical analysis to help guide us. And we're going to go into the broad markets and then I'll look at some individual trade ideas, individual stocks. So we're going to start out with triple Q's tech. So last week I pointed out right here on this day, right there, that we opened the day right in the morning with a break below support, but then they quickly recovered it. We didn't even get an hourly close below that key support level right there at about 360.65. There was no hourly close, so we didn't have a sell signal. No reason to actually short the market, and I talked about that and why I wasn't interested in shorting it yet, because I was looking for that breakdown. We didn't get it. So what we've got over the last 3 days is just, this is the dip buyers. It looks, you can see what happened last time right here. We get a little dip and then they just step in and just smash it higher. Really the same kind of price action right there. We do have a new divergent high, and you can see here as I zoom out, we're just extending the divergences like that on the RSI and the PPO. So we've got a new higher high in price with still, lagging momentum. So again, I'm not really interested in being long. These divergent highs can continue. Divergence is not a reason to short. It's not a reason to just all of a sudden short the market. We need to see a break of trendline support. We need a sell signal. We do not have that yet. But divergence indicates that the setup is there for a correction. So since the setup's there, I'm looking for the sell signal. Until I get it, I'm not interested in being long, but at the same time, I'm not interested in shorting until I get the sell signal. So it's a flat trade. It's just more of the same, breaking to new highs today and with negative divergence. So that's all we have there. You'll see here with the big large cap tech stocks, they're all getting bid today. And actually relatively a broad-based rally. When I was looking at the equal weighted indices, it's a pretty broad rally. Oops, sorry about that. Had a phone call. Pretty broad rally. So, just nothing really to short in the broad-based indices as of today. Amazon catching a bid. But again, Amazon, bigger picture, just big sideways range. So it's not so much about what happens each and every day, but it's all about what's been going on for over a year. So maybe we're going to bounce up to resistance and then sell down. The point is we're stuck in this big sideways range. And from a swing and trend trading perspective, we did have a bull trap up here. So I do think there's going to be more selling. We're just seeing a counter trend bounce, and I think there's more selling to come in this one. Google, I adjusted my line a little bit. I had it down here like this where we were trading above, but actually I'm going to move it up so that we're just trading kind of right below. We're uptrending in Google, and the price is bullish. We just continue to uptrend, but we have big negative divergence that continues to build. This high that we're making today is just a new divergent high. So you'll see here making a new slightly higher high in price on less momentum. The momentum right there is lower than the past. Okay, so that's just continuation of negative divergence. Again, this is why negative divergence is not a reason to short. It's just an indication, a mere setup that the conditions are right for a correction. Okay, so I think we're going to get a correction, but we need to see some sell signals. Moving on to Microsoft. I don't see anything particularly bearish in Microsoft. We have a clear uptrend line. The charts, it's basically just continues to move higher. So nothing necessarily bearish. There is some negative divergence, and that is there. So I'm looking for other levels to break on some of these other fangs. I think if we broke in the short term, if we broke this level right here on the daily chart, which is this minor trend line right there, if we got a breakdown of that, that's probably your sell signal in Microsoft. Again, we do not have a sell signal, no reason to short. Apple, nothing's really going on in Apple. It's just more sideways action. You can see sell off, buy it up, sell off, buy it up, buy it up, sell off, sideways. All right. So we're not changing anything technically even today. We are just literally going sideways with negative divergence. And again, nothing says we're not topping out. We can chop around sideways for a while, and that we could be topping out. We don't have to be, but we could be. And you can see we still have negative divergence. It's just remaining. Although we don't have a new high in price. So not a new divergent high, just sideways action. Facebook, just bearish rising wedge pattern, and that just remains. We're just continuing to grind within the wedge. So, until that changes, we don't have a sell signal. We need to see a break of trendline support for that sell signal. And until then, we'll just continue to grind within the wedge. Okay, even though the Qs and the indices, there's just no trade right there, doesn't mean that we can't make money. And today we're making good money in the miners, the gold miners and gold stocks. This is I've been talking about this one as one of the best long setups. Again, I'm more interested in going long the miners after a nice long bull market correction. And to mark that out, you can see the bull market corrections really started back here after this blow off top right there. Nice long correction of over 20%, lasting several months. And then we broke out. Here's your breakout. And then we back tested. We actually had a full back test right there on that Sunday night. The gold bullion sold off right down to that 1682. That's major support where it held. And we've been bouncing since. So as far as I can tell, we're starting the next leg higher in gold. And looking right here, there's this level at about 1790, 1800. That's a major level. And you can see right here today, we're breaking above it with gold up 24 bucks. That level, 1790, if I roll out to a weekly chart, was major resistance back in the last bull market when it ended. Back in 2011, 2012, and late 2012. We tagged that 3 times and then failed and went into a big bear market. All right, so as I zoom in, there's that level. All right, we've popped above it again right there on the weekly chart. So I think we're starting the next leg higher. Looking at the hourly, really this is going back at least a week, I believe. We were chopping around sideways, kept getting rejected at that 1790 level. You can see rejected there, rejected there, rejected right there, rejected there. Finally today, breakout above it. So break and hold, and we're likely closing above it. So clear breakout in gold, and as far as I can tell, it's full steam ahead to the upside for gold and the gold miners. Here's GDX. Again, I had this circled for a while, and here's the level that I talked about as a potential, the support zone, the buy zone. I've been talking about this, and I said, I think we could get down here, and this is going to be the buy zone or the major support zone. We had bullish divergence right there. It's completely confirmed, and it had been building for a while. So all of these little dips below have been divergent lows, meaning you're making new lower lows in price, but the momentum is starting to build to the upside, telling you that price is likely going to follow. And so we dipped down below. We got to this level at 31.36, and on the weekly chart, that's a major level of support. You can see I've got it marked right here. There's 31. It's about 31.36. It was resistance here back in 2016. Resistance. We finally broke above, and it's support ever since. Support, and again support. And if I zoom back down to the daily, you'll see we dip below it just slightly for 1 day, 2 days basically, and then today pop right above it, and the buyers are right there. That's a bear trap right there. That was support. We broke the level and then recovered it. This is a very bullish sign right now that you've recovered that level and you're running pretty strongly. So this is up almost 5% and continuing to run. So again, if you're buying the Qs, you're up. Going back to here, if you buy the Qs, you're up 1.5%. If you're buying GDX and the gold miners, you're up, almost 5%. So it's outperforming. All right, these are the areas that have been most bullish on, outperforming today at least. So we'll see if this continues. I do think we probably just tagged the bottom of that, and we're likely going to run up to next level of resistance, 34.37. And probably start to break to the upside and make a new leg higher is what I'm really thinking. Oil, I think oil is going lower. You can see we're clearly in a downtrend recently where we're making a series of lower lows and lower highs like that. We're having a counter trend bounce today. Again, some of the biggest rallies come in bearish trends. So you'll fall and then have these rip your face off, few day rallies and then they just get sold into. So that's expected. I would expect this area of about 69.39 to kind of cap us. Now we could run up and pop it a little bit intraday or maybe a one-day pop, but I'd look for it to fail right around there and keep the downtrend intact. So that's what I'm looking for on oil. Therefore, what I did this morning is added a little bit to this drip trade. So we got on this pullback. I added a little bit. It's a very profitable trade so far. You know, I've been long drip since the breakout. Here's your buy signal or the breakout. We had bullish divergence down here, and there's your buy signal. And if you bought, even at the end of the day, the trade at the end of today, or as of where we're at, is up 38%. So I'm adding a little bit on this pullback, and I'm still looking for you know, an uptrend, basically. Looking to get up to about this $14 range on drip as the final target for me on that one. Couple short updates on some of these short trades. American Eagle, you can see we bounced right to resistance right there at 32.59, slightly above it, but basically it looks like we're going to close right on it, and I suspect we sell off after this. So I added to my short trade. Again, what I did on this one is your sell signal came right here. We consolidated. We broke down. I covered my short trade right there at support, talking about how I will add to it back if or when we bounce back into resistance. We did that. There's your bounce into resistance. I add it back short here. It's the opposite of buy the dip, right? It's sell the rip. Because when you have an uptrend like this in AEO and you build negative divergence up here at the high, see how we're just dropping off on momentum, and yet we continue to make new highs in price. There's a slightly new high right there, negative divergence, and then finally you break that bullish uptrend. You now start, you either start a sideways consolidation or a downtrend, and as far as I can tell, we're downtrending. You can see lower lows, lower highs, downtrending. So when you're downtrending and you have a a bearish chart, you want to sell resistance. Short into resistance or get out of your long, however you're trading it, but it's a sell the rip. It's sell the rip, not buy the dip, and that's what I see right here. So again, adding back, looking for, ultimately I'm looking for this one to probably get down to about 26.03 for the final target. TLT, this is the long treasury bond. You can see the market's popping today with negative divergence. The bond market is not reacting, so bonds still holding up, and again, oftentimes people will run to bonds for safety, so we are seeing no change in the bond market. I think the bond market, we did have a breakdown right here of this uptrend. We could start to sell off. I'm not trading the bonds, but it's things to watch. It's just the fact that the bond market's not really reacting today, even though the market's breaking to new highs. The bond market's not really having a reaction, so that's interesting. There's something to watch. I think the long bond's likely going to go up to here to about 154.60 before maybe starting to sell off. We'll see. And this is just a trade setup. Alcoa AA. It did do what I thought it was. I talked about we were at support, so I was expecting it to bounce. The dip buyers will continue to buy the dip until they get burned. And nobody knows when that will be. But here is the bounce, obviously. So now I think if we're going to sell down back to this trend line, we'll probably break it. I'm, again, looking for a break of the trend line, so a nice impulsive breakdown of this support line. This is coming off of March 2020 lows, clear upward price channel right here. A break of that trend line would be the next sell signal. And I'm expecting that to happen because you have big negative divergence that's been building for quite some time. So this tells me that the momentum is drying up, and these little bounces are going to get less impulsive but not bounce as high, and eventually we're going to break to the downside. If that happens, you see that sell signal show up, then first level of support should be right here at about 31.68. We'll probably get a bouncer reaction there, and then next level of support 25.12. Those are the only targets that I have right now on that one. But again, if we get that breakdown, depending on where we break, we have the potential for a 33% drop. That's pretty substantial. So I'm going to wrap it up here. Let me know, guys, if you have anything you want me to look at. And if you're new and you haven't checked out my stock market technical analysis course, I put that together. It's about 4 or 5 hours of video training on all kinds of different topics. Link in the description below. Check that out. Leave me a thumbs up on your way out if you guys find some value. And one thing I want to mention, though, I will not be able to put out videos for the rest of the week. I know I just can't do it. I have to go out of town, and I'm just not going to be able to get any videos out with the charts. I won't be in front of a computer, so going to have to leave you guys hanging for about a week. But I did want to cover all the different trades that we have kind of going on and the outlook. So thanks, guys.